Right now, silver is doing the thing it always does before people finally understand it. It's moving just enough to pull attention back in, but not enough to reward certainty. And that's the zone where mistakes get made. Because silver doesn't punish ignorance first, it punishes confidence. Especially the kind of confidence that forms after a few clean green candles and a handful of headlines that finally start agreeing with the thesis people have been repeating for years. The news cycle around silver has quietly shifted, not loudly, not dramatically, but in that subtle way where stories stop asking if something matters and start asking how far it can go. You see it in the way banks talk about industrial demand now. You see it in how supply deficits are framed less as hypotheticals and more as constraints. You see it in the way silver is no longer introduced as gold's volatile cousin, but as its own market with its own drivers and its own timing. And timing is the part that ruins people. Because silver news rarely breaks cleanly. It leaks, it bleeds into macro stories. It hides inside energy transitions, inside electrification targets, inside geopolitical hedging, inside currency stress. And by the time it's obvious, the repricing has already started. That's usually when people show up late, over-leveraged, and emotionally attached to a straight line that was never promised. What makes this moment tricky is that the fundamentals and the tape are telling two different stories depending on your time horizon. On a long enough timeline, silver looks structurally tighter than it has in years. Mine supply hasn't meaningfully expanded. Grades aren't improving. New projects aren't flooding the pipeline. Meanwhile, industrial demand isn't theoretical anymore. Solar isn't a buzzword. Electrification isn't optional. Defense, medical, and electronics demand isn't cyclical in the way people want it to be. It's sticky. It's embedded. And once it's embedded, it doesn't unwind just because price goes up. But markets don't price decades in a straight shot. They price stress first, they price positioning, they price behavior. And silver is small enough that behavior matters more than logic in the short run. A little capital rushing in can push it too far, too fast. A little fear can unwind weeks of progress in days. That's not a flaw, that's the feature. Silver is designed to test whether you actually believe what you say you believe. The latest silver news isn't one headline, it's the absence of panic on pullbacks. That's the tell most people miss. In past cycles, silver would rally, roll over, and sentiment would evaporate immediately. This time, even when price stalls or retraces, the bid underneath feels more patient, less reactive. That doesn't mean volatility is gone. It means the ownership base is slowly changing. Less tourist money, more allocation money, more people who aren't watching 5-minute charts and counting ticks like a scoreboard. At the same time, this is not a market that rewards aggression at the wrong moment. Every time silver starts trending on social feeds, every time people start anchoring to round numbers, every time screenshots replace reasoning, risk is rising even if price is rising too. That's the paradox people refuse to accept. Price going up doesn't mean risk going down. In silver, it often means the opposite. What's happening under the surface right now is a compression of narratives. Inflation isn't gone. It's just not the headline of the week. Rates aren't coming down fast enough to relieve pressure, but they're not high enough to kill demand either. Growth is uneven. Liquidity is selective. And in that kind of environment, assets that don't depend on perfect conditions quietly gain relevance. Silver sits right in that uncomfortable middle where it's not exciting enough to dominate the conversation, but too important to ignore. The news out of the industrial side matters more than people think. When silver demand is framed as optional, it's easy to dismiss. When it's framed as input cost, it becomes non-negotiable. Manufacturers don't care about your macro thesis. They care about throughput. They care about reliability. They care about supply chains that don't break when policy shifts or shipping lanes tighten. And silver keeps showing up in places where substitution is harder than spreadsheets suggest. At the same time, the monetary side hasn't disappeared. It's just quieter. Central banks don't talk about silver, but they talk about the conditions that make silver relevant. Debt loads, currency management, financial repression by any other name. When trust in paper promises, erodes slowly, not catastrophically, metals don't spike, they grind. And grinding markets are the hardest to stay committed to because they feel boring right until they dawn a T. The mistake people keep making is assuming silver needs a crisis to work. It doesn't, it just needs pressure. It needs enough imbalance that holding something tangible starts to feel prudent instead of paranoid. We're already there for a lot of capital, even if the headlines haven't caught up yet. But here's where discipline matters. Because silver doesn't move like a policy paper. It moves like a psychological experiment. It runs, stalls, fakes out, and then moves again once enough people have convinced themselves they missed it or that it has over. The shakeouts are not bugs. They're clearing mechanisms. They reset positioning so the next move can happen without collapsing under its own weight. That thesis, why the most dangerous thing you can do right now is assume you understand what comes next, simply because you understand why silver matters. Those are two different skills. One is macro literacy, the other is market survival. And silver will happily expose the gap between them. If you look at positioning instead of price, you can see the tension building. Not euphoric, not empty, just crowded enough that any surprise feels bigger than it should. That's why corrections in silver feel personal. They don't just hit your portfolio. They challenge your identity as someone who gets it. And that's where people break their own rules. The news everyone wants is a prediction, a number, a date. That's never been the edge. The edge is knowing how you'll behave when the number goes the wrong way first. Because it almost always does. Silver has a long history of being right eventually and miserable early. If that bothers you, the asset isn't the problem. What's different this time isn't the thesis, it's the backdrop. In past cycles, silver competed with fewer narratives. Today, capital has more places to hide, more stories to chase, more ways to speculate without touching anything physical. That fragmentation delays euphoria, and delayed euphoria doesn't kill bull markets. It extends them. It stretches them out until people stop paying attention and positioning quietly rebuilds underneath. The risk, of course, is assuming patience equals safety. It doesn't. Silver can still drop hard. It can still cut through complacency. It can still remind everyone that volatility doesn't announce itself politely. That's why size matters more than conviction. If your position forces you to check price compulsively, it's too big. If a pullback changes your worldview, you didn't have a plan. You had a hope. The smartest silver news right now isn't bullish or bearish. It's conditional. It's about ranges, not targets. It's about exposure that survives being wrong temporarily. It's about owning the asset without letting it own you. And that's the part most people don't want to hear, because it's not exciting. It doesn't make you feel early or smart. It makes you feel patient. And patience doesn't trend. But patience is exactly what silver demands at this stage. Not blind patience, structured patience. The kind where you already know what you'll do if price spikes, and you already know what you'll do if it drops. No improvisation, no emotional negotiation with the market, just execution. The broader macro news will keep rotating. Some weeks, silver will be framed as an inflation hedge. Other weeks, it'll be framed as an industrial metal. Other weeks, it'll be ignored entirely. None of that changes the underlying setup. What changes is who's holding it and why. When ownership shifts from speculative urgency to strategic allocation, the character of the market changes. Moves get slower, pullbacks get bought differently, volatility doesn't disappear, but it stops being existential. And that's when silver becomes dangerous in a different way. Not because it collapses, but because it lulls people into thinking it's safe to overstay without respecting risk. This is where most cycles are lost, not at the top. In the middle, in the phase where being right feels easy and discipline feels optional. Silver doesn't care how long you've waited. It doesn't care how clean the macro case looks. It doesn't care how many people finally agree with you. It only cares about positioning and flow. And right now, flow is improving but not settled. Supportive but not euphoric. Constructive but not forgiving. That's a good place for the asset. It's a bad place for shortcuts. If you treat silver like a trade, it will trade you back. If you treat it like a long-term repricing with short-term violence built in, it becomes manageable. Not comfortable, manageable. The next real silver headline won't be about price. It'll be about stress somewhere else that forces capital to reassess what resilience actually looks like. And when that happens, silver won't ask permission. It'll move, quickly and unevenly. And anyone who waited for clarity will be reacting instead of acting. So the real question isn't whether silver is bullish or bearish from here. It's whether you, structured your exposure so that either outcome doesn't break you. Because the market doesn't reward certainty. It rewards preparation. And silver, more than almost any other asset, is a preparation test disguised as a price chart. If you pass it, it doesn't feel dramatic. It feels boring in hindsight. If you fail it, it feels unfair. But it was never unfair. It was always exactly what it is.